All right. Hello, everybody. Welcome back to another episode of the Market Close. We've got some stuff to talk about today. We haven't had a crazy market since the market opened. I mean, we've had some things happen that are important. Other headlines have been relatively neutral in terms of the overall impact they've had on the market. I think when I left, we were down about 0.5% on the S&P. That ended up getting worse. We went down about 1% by, call it 12 p.m. noon Eastern time. And we've largely recovered. Now, Nvdia hasn't completely recovered. It's still down 2%, but Nvdia was almost down 4% on the day. Palantir up about 1.4. At one point, it was up about 1.7%, 114.36. We'll see if Palantir can close above 114, which would be an incredible day because a lot of growth stocks have gotten slammed today. But Palantir holding up. S&P is flat. So on a day like this, again, headlines have been relatively neutral, and we got a bunch of them that we're going to talk about. We do have waste management earnings to discuss as well. That's going to happen at 4 p.m. That's the big earnings that we have today. Everything else that's really important for this week will be happening over the next 3 days. So Domino's in the morning, waste mornings in the afternoon, but nothing else too crazy on earnings. Domino's, by the way, also recovering. It was down 3% in the morning. Now it's up 2%, 496. So, I mean, nothing that crazy. The Q's 0.01% down. Robinhood's down about 1%. MicroStrategy was down 3%. Now it recovered. Even Tesla went down 3%. Now it's basically flat. 284.83 went to 295, then went to 275, ended up at 285. So outside of Nvdia, which we'll talk more about in terms of why the chip stuff from China is becoming such a negative headline for the company, day's been relatively flat. One stock that has done pretty well today, Snapchat right here, up about 4.2%. I think at one point it got almost to $9. Yeah, it got just above $9 at one point, then came right back down at $8.90. I do have a swing trade on this for 1,000 shares. Got bought in at $8.70 yesterday, so we're going to see if we can get to that 11-12 range on earnings. But outside of that today, I mean, you don't have that much noise. Rivian's up about 5%. Oh, Hims, we'll talk about that. Martin Shkreli did a podcast. Hims is up 1.6. It was up 8% during the day. Now it's up 1.6%, but we do have some headlines on them. Grab's relatively flat. SoFi's doing okay. They've got earnings coming up tomorrow. That'll be really important. But the real juice of how these stocks are going to react post Q1 happens when they report their earnings. And that's likely going to happen over the next 3 days as we have 180 companies that will be reporting. Tommy, thank you for becoming a channel member. I don't even think I should try with the name. The last name is a really cool name. There's no way in hell I'm going to get that. Katzenellenbogen. What nationality is that, dude? Katzenellenbogen. That's I feel like that's got to be European. It's got to be some type of name. But Tommy, thank you for being here. And thank you for becoming a channel member. All right, let's get into some of the headlines. So first of all, you guys have been messaging me like crazy about this one. So let me bring it up right here. Figure, we were talking about them in the morning for a little bit, a humanoid robotics company that I think we use to kind of assess the state of the humanoid robotics industry. Obviously, Tesla is a big player in there. So what Figure does also affects Tesla as well. Apparently, UPS is in talks with Figure AI to deploy humanoid robots. This was reported by Bloomberg just, I think, 30 minutes ago. So this is a fresh new headline in regards to Figure and UPS. This will be pretty big. This will be pretty freaking big. We already know they have a public partnership with BMW, and they've been working with them for about a year now in South Carolina and their factories down there. And now, I mean, if you were to get a UPS, I mean, what do people do at UPS inside of those warehouses? A lot of times it's just move packages back and forth. So if you got robots that can move packages back and forth, it seems pretty obvious that UPS would be interested in the idea of being able to navigate and replace a lot of their current staff with humanoid robots. Now, I don't think there's going to be any replacement anytime soon. I don't think it's going to be some dramatic type of change. But the point is, it goes back to the argument about why, wow, look at Tesla getting this boost. Just turned green, 286.4 as we get into the close. It looks like we're getting a pretty green close across the board. Even Nvdia getting a nice green candle right there. Look at this SPY. Hold on. Do we have some news? This might just be 10 minutes, last 10 minutes of the day. Algo's going crazy. I don't think there's any news, but everything getting a little bit of a bid right here. But the point is, it's hard to be bearish when all this technology is progressing at hypersonic speeds. And UPS is one of thousands of companies that could be replacing their humans with robots and becoming more efficient and productive and increase their margins. And as a result, Figure, Tesla, Electronic, all these humanoid companies should be able to catch a bid if they're able to secure these partnerships. I don't see any headline right here. I don't see anything right now. We do have a couple things from Trump, but it's not that different from the tariff stuff. Besant is going to be speaking tomorrow at 8:30 a.m. and then Lutnick speaking at 2 p.m. So maybe buy at 8:30, sell at 2 p.m. tomorrow. But tomorrow is going to be a very unique day where Besant and Lutnick both talk to the media. Outside of that, I don't think anything else crazy is going on in terms of like what's causing this little last 10 minute pump that we're seeing right here. Nvidia right here down about 2%, Snapchat up 4.5% on the day, Tesla 1322, or sorry, Tesla 286, and then SoFi right here 1322. So yeah, in terms of the Figure headline, it's a big deal. I think it would be incredible for Figure to land this type of a customer. Bloomberg's reporting it. When Bloomberg tends to report on these things, they've at least so far got it right in regards to Figure. They were the first company, or one of the first media publications, and I remember this the day the article came out because it was like a couple months after I invested, around BMW. So I think if Bloomberg's reporting it, there's probably a little bit of truth to it. And if that's the case, then this is a big market that continues to grow, and I expect Tesla to inevitably land some of these deals. Now, what Figure's doing with UPS and potentially and BMW is that they're showing the market that people want their robots. Tesla's not doing that. And in the Tesla argument as well, they're deploying their robots internally. So Tesla themselves is a client. That's cool. But I think when it comes to Wall Street and JP Morgan and Goldman Sachs, and for them to upgrade the stock, if Tesla were to say, hey, Walmart wants 10,000 robots from us, I mean, there is an argument where I think the market starts thinking, oh, the humanoid story is very real. And so if you're investing now for that thesis, you believe that eventually Tesla will say that. But until they say that, I think the market's not really going to have confirmation on if that is definitely happening in Tesla or not. Update on Nvidia's chip. So Nvidia, one of the stocks that was the most read today. Here is why. And then we'll talk about some of the implications on what this means for the semiconductors.
To approach the arms race with China. Deirdre Bosa has more in today's Tech Check. Dee.
Hey, good morning, David. So on one side of that split, you have big names like Mark Andreessen, Bill Gurley, Brad Gerstner. On their latest podcast, the latter two of those, Gerstner and Gurley, they argue that containment is a distraction and ultimately a losing strategy. Stay in your lane mentality versus looking around for your competitor, which will cost you, they argue. But then there's another side, many of which are within or have close proximity to the current administration that are just dismissive of Huawei's and DeepSeek's progress. They argue that the U.S. lead is too big to lose, and they see this as a more finite race, win or lose. You've got David Sachs, Trump's AI czar, who argued on a recent All-In podcast that the government has to be tough and cannot let China have access to our leading edge technology. After our own Tech Check segment about a week ago on export controls backfiring and boosting Huawei, someone else from the administration DM'd me saying that I misunderstood and Huawei was actually way behind. Elon Musk, by the way, he's more complicated supporting EV trade barriers, but seeing China as a serious threat. Meanwhile, guys, the news of the day, Huawei is about to test a newer and more powerful chip, the potential of which is hitting shares of our own national AI champion, NVIDIA. Back in 2019, I went to Shenzhen, China to interview Huawei CEO and founder Renjung Fei. At the time, Huawei was facing a U.S. ban of its telco equipment and a ban of its Android license, which nearly killed off its smartphone business entirely. Here's what he told me at the time.
If we weather the storm, then we will get stronger. So what doesn't kill you will get you stronger. In China, we say the phoenix will rise from the fire, and the bird that doesn't get killed by the fire is a phoenix. And we believe this big fire will address this issue at our hand, and we can get stronger during this process.
And that is really the Chinese mentality that has endured since then, summed up quite nicely. And since then, of course, Huawei's comeback, it has been nothing short of remarkable. It has rebuilt its smartphone business, its
So the point is Huawei's catching up. Now, granted, there's other people that say Huawei's not catching up. I would tend to believe Huawei is not as advanced as we think they are, but the potential for them to get as advanced now that they are being forced to innovate is possible. However, I don't think there's any major American tech company that would pick Huawei over Nvidia. That's a joke. It would just be like the Tencents, the ByteDances of the world that are already buying Nvidia chips. They might end up having to get more Huawei chips if they don't have the capacity to get Nvidia chips. What would be very interesting around this kind of semiconductor chip innovative dilemma right here is if the big tech companies go to the CCP and they say, hey, if you want us to compete in AI, we can't use Huawei. We need Nvidia. Now, granted, the CCP might say, screw you, we'd rather lose an AI than let America get a win right here. But if there's a world where Alibaba goes up to the CCP and they're like, hey, we tried Huawei's chips, Google, Amazon, Apple, they're going to kick our ass unless we get the best chips ever. And the United States is not even allowing the Blackwell to be sold. There might be a world in which the chips that are needed are the chips that are requested. It's just going to be a question of if China or the United States blinks in terms of letting NVIDIA get those profits, and if China allows them to even sell into the country. HIMS, we got 4 minutes until the market closes. Quick update on HIMS. So Martin Shkreli, who is a biotech investor, gave 3 quotes to a podcast called HIMS House on what he thinks about HIMS. So here are some of these quotes. 1, I've been humbled very many times in my life, but if I know I'm good at one thing, it is short selling. And I think HIMS is a terrible stock to sell short. I don't know why you would want to short a stock that's growing at 100%. I have never seen that be successful. 2nd, 2 of the best 5 hedge funds, Citadel and Farallon, are long HIMS. You are growing 100% year over year. You've got management team that is not like some corporate McKinsey guy. The guy has built it with his own hands and has taken it from no revenue to $2 billion. And he's sitting on the biggest industry in the world that can be transformed via technology, aka healthcare. He then said, I own HIMS stock. It is a no-brainer. I recommend it. And then he said, I think we can get back to a $20 billion market cap in relatively near term. By the way, the reason he said I recommend it, and you might be thinking, oh, why is he giving financial advice, is because Martin Shkreli thinks that the idea of saying not financial advice is the stupidest thing ever, even though everyone does it because they're always so scared. But this guy is very ingrained in the legal apparatus of financial advice. He's had a lot of run-ins with the SEC. And theoretically, if a YouTuber were to say the words, I recommend it, like, you can't really sue them. That's not so he really doesn't care. He says whatever he wants. So for HIMS, if you're a shareholder, you got Shkreli on your side. And Shkreli is, he tends to be pretty smart when it comes to short selling. I don't know what his record is with going long, but if he thinks going short here would be a mistake, maybe there is some fire to that momentum in terms of what could happen when we think of HIMS going into earnings next week as well. NVIDIA right here still down about 2%. Look at Palantir on the day. Look at that V-shape. Went all the way down from 114. We cracked that at around 940, down to 108, now back to 114 during the day. Pretty incredible. Pretty damn incredible right here. 114.61 on Palantir. Again, we got earnings May 5th, so this is not going to be the week for Palantir in terms of massive earnings momentum, because they're going to be the week after. But we do have SoFi, Hood, Grab, Big Tech, Microsoft, Amazon, Apple. We'll talk a lot more about those companies as well. But Palantir still acting like it might be their earnings week in terms of the momentum that it's getting right here, up 1.65% of the day. We got a minute left until the market closes. It looks like we are going to get that 114 close. Grab basically flat on the day. The S&P goes from 553 down to 545, back to 550. And what's even more impressive than just the S&P is look at bond yields, dude. 4.214. Haven't had that in about 2.5 weeks. Yeah, Nesh right there, as I'm talking about a 10-year at 4.21 going down lower. We're starting to see some stabilization. You've got bond yields going down. You got stocks going up. You got rumors of UPS working with Figure, which are just good because it lets people remember that AI is a thing and it's not going anywhere. And you got Bitcoin, that's up 1% of the day, 94,853. Michael Saylor did buy another 15,000 Bitcoin worth $1.5 billion this morning. So, I mean, some things are starting to clear up, but I think the next big catalyst is, can we get these trade deals? And hopefully over the coming days, if not sooner, we get that first trade deal announced. All right, here we go. Monday, April 28th, 4 p.m. Thank you, everybody, for being here. The stock market is now closed. All right, there she goes. We are done for the day. Waste management is on the docket. Tomorrow is going to be a really crazy day with the amount of earnings that we have. Today, we only have one to look at after hours. Waste management. Let me get a couple numbers on these guys and see what the street is really looking for here. This company has always been a pretty stable company across any macro because everyone needs their trash to be clean. And Waste Management controls, I don't even know how many of the overall trash centers in the United States, but they are a massive, massive company when it comes to cleaning up waste. The market cap right here, $92.13 billion. Let me try to see what the street is expecting after hours from them. And then we should be getting their results. The street wants $6.12 billion in revenue and $1.62 of EPS. Waste Management down a little bit after hours. I think they report at 4:05, so it might take a second. And then we'll see what results do we get there. In terms of some of these other stocks, Tesla ends the day up about 0.3%, 285. SoFi, 2.48%. Great day for SoFi, 1320. Nvidia down about 2% on the day. Palantir closes 114.65, 1.71%. Again, it was at 108 at around 10 a.m. So a nice reversal from 108 to 114. Grab basically flat on the day. S&P 500, 550, also flat 0.05%. Robinhood was down on the day, down 1%. It's up a little bit after hours. We got to 51 at one point during the day, and then it came back down. So Robinhood right here at 48.93. Rocket Lab as well was at almost 24 during the day, 22.67, still closed up 1.64%. Spotify's tomorrow, they were actually down 4%. There was a headline that Spotify spent $100 million paying podcasters, almost like YouTube pays YouTubers with the ad revenue splits. Spotify's like introducing that, which is going to hurt their margins, but it's good because more people will be posting on Spotify. So I think investors are not going to care that much if it hurts their margins. But tomorrow we're going to get their actual results and see how effective their monetization program is working out. Waste management after hours down about 0.5%. Again, nothing too crazy. I think the implied move is about 3% on this one. So it might take some time to see if that one plays out. Okay, so we also have a couple other earnings. I'm going to put them here, even though I don't cover them that much, but we'll definitely see what they do. We have Theradyne. This is a $13 billion company. They have earnings. And then do we have Cadence Systems today? Oh, we do have, oh, this is actually a big one. Cadence Systems. Okay, this is a $78 billion. This is in the semiconductor space. They design semiconductors, if I'm not wrong. And then NXPI, there's another semiconductor company. Oh, wow, I forgot about these. All right, so we got two semiconductors, and then Theradyne, NXP right here, $50 billion company. It looks like Cadence is down 1.28%. All right, so that one's red. Waste management down about 0.5%. CDNS, that one is down. I'll pull up the numbers right here on that one. Let me know if anyone owns any of these names. They're less covered names, but still important companies regardless. Okay, Cadence, they got 157 versus 150, beat by 5%. Revenue 1.2 versus 1.24. That is also a beat. EPS is up 34% year over year. Revenue is up 23% year over year. This one basically flat now after hours, kind of going back and forth between down and up. Cadence Design Systems, that one right here, up about 0.38% after hours. I think it's hard for a lot of the semis, even with good earnings, to move because of NVIDIA. But that one is down. Waste management also flat after hours. And Theradyne, that's up 1.16%. We'll see if we can get their earnings as well. Will you be live for SoFi tomorrow? Yes. I think I'll be live, though, around 7:25-ish. Not exactly at 7. The results come out at 7, though. I'll see. Maybe I can go early a little bit before that. But usually I tend to do SoFi around that 7:20 time, and then we just kind of break down the results and see. Also, I think we have PayPal tomorrow, if I'm not wrong. Yeah, we do. Okay, so maybe I go early for PayPal. So PayPal and SoFi, two big fintech names. PayPal on the day, wow, down 0.5%. All right, so PayPal's last earnings was not the best because they basically said 2025 was going to be a transformation year versus a growth year, which, given the valuation of the stock, you don't need a ton of growth, especially with the buybacks. But the narrative in the fintech space around PayPal is just not the best. And so don't know what Alex Chris is going to do to get the market to see the growth value or just the value potential of it. By the way, Cadence right here up 3% now after hours, getting some momentum as it should. It was good earnings for them. But we're going to have to see what happens and how this plays out with PayPal. Do you own SoFi? I own options on SoFi. I was talking to Tanner in Toronto over the weekend. I have 100 call debit spread. So if we get to 20 by January 2026, I'll make 50 bands. So we'll take 3 to go to 50. And Tanner was like, oh, bro, you're definitely like, don't worry. It's going to do. I was like, Tanner, you're saying with a lot of confidence here, but I'll see it. If we can get to 20, then it'll be a really good trade. I bought those options back in September of 2024 when the stock was like just at $7. But we got to get to 20, which is almost a 3x. Like I bought the stock with the assumption that if it 3x'd, I would 14x my money. And I mean, I bought it because I felt like SoFi didn't deserve to be 7. Do I think it deserves to be 20? Yes. Do I think it'll get there? I don't know. But we got about 7-8 months to see if that can play out. So, okay, NXPI. Let me see if we have earnings for them. We got Cadence. We don't have waste management yet. Yeah, we don't have any of those results yet besides Cadence. All right, so let's while we're waiting for some of these results, let's pull up Dan Ives. Let's right now about the semiconductor, or not the semiconductor, but the overall tech sector. And then we'll get into the preview of some of the other earnings that we have as well. And I'll try to get these waste management results right here.
Trade tension, kind of, what is the message or signal there?
Yeah, I mean, look, I think that when it comes to advertising, I think we're going to see a rebound. That's something I think we're going to see when it comes to Meta And overall, it speaks, I think, a theme for the week when it comes to advertising, cloud, and AI. I mean, really, the key focus is what does spending look like? Is CapEx holding up? We believe it is. I mean, I think big tech this week is going to be more of a confidence booster rather than putting gasoline on the fire in terms of the fears. I think that's the important thing we're going to see from big tech. I think Alphabet was just sort of a little preview of what we're going to see this week.
We spoke to an investor last hour who said he's still cautious on big tech and basically still thinks that, there's a soft patch coming in the economy and that he's kind of hiding out in some of the insurance names and a little bit more of those steady Eddie spaces. So what would your response to that be?
I mean, I would have said, if I go back a few weeks ago, like you don't know where this is all going. I can tell you from all of our survey work and everything we've seen in the field, like AI spend holding up like Rock of Gibraltar. Like when it comes to the cloud in terms of overall spend, I think there's parts where it's actually accelerating. Look, uncertainty is there. And that's definitely going to create in terms of guidance, huge sort of goalposts that they give. But big tech, even though tariffs, it's not stopping the AI revolution.
Well, I thought it was notable over the weekend. We always talk about how people kind of gathering their thoughts over the weekend, and Michael Darda, who's a kind of a macro strategist and economist, but he'll make tactical market calls. And he said he's experienced what I've experienced, which is AI has gotten so much better over the past year. Like I would talk about, I now use it all the time. In the past, it was more just kind of a goofy tool. It just wasn't as good. And he said, I'm changing my investment thesis from bearish on tech to bullish on tech and on the AI pieces of it, literally as a result. Because he's like, I now see how this is going to bear fruit.
Yeah, and I think like what he's talking about is what enterprises are seeing. And that's why we've talked about in our survey work, like they can't all of a sudden just halt projects because then you're at the back of the line. And I think when it comes to Microsoft, when it comes to Amazon, especially on the AWS piece, when it comes to what we're going to see, in terms of Meta from an advertising perspective, it's all about this AI revolution. And even though tariffs has created massive uncertainty, we'll see that when it comes to Apple in terms of, from a production perspective, software, that's a safety blanket. Hyperscalers, the spending is going to be there. And I think that.
So Dan getting bullish again. I know a lot of people felt he was bearish, but the main source of his bearishness was mainly because of these tariffs. If we're rolling those back, then I guess, you could theoretically be more bullish then if it's coming back down based on this headline-driven market. Again, Lutnick and Besant are going to be on CNBC tomorrow talking about the deals that they're supposedly getting done. And if we get some more updates from there outside of the stuff we got from Besant this morning, then that would be good. Actually, Besant's not going to be on CNBC. He's going to be hosting a press briefing, which seems a bit more official. So maybe there's like the rumblings of like an actual deal being announced. But we're going to have to see what comes from there. Waste Management, I don't have their numbers yet, but let's look at Cadence again real quick, and then we will get to see from Waste Management here.
Billing, which we'll say is roughly in line, up 23% year over year. For full year guidance, it's slightly better. This would be full year guidance of 5.15 to a range of 5.23 billion. Non-GAAP gross margins also a little bit higher for Q1 at 41.7. One quote actually stands out to me in this release from the CEO saying, quote, "We haven't seen any changes in customer behaviors at this time as they continue investing in R&D for their next generation designs. Our resilient software business model, strong backlog, and AI-driven product innovations position us well." So this is another company that's saying they haven't seen any changes in customer behavior. Both TSMC as well as STM also had the same sentence, I would say, in their reports as well. And you can see shares jumping over 2% right now, Morgan.
Okay. So another semiconductor company saying, hey, our demand is good. It's not going anywhere. More R&D needs to be done for the next architecture of chips that are going to be implemented into these companies, especially for the hyperscalers. And so it makes sense that Cadence is continuing to see the demand and growing revenues at 23% year over year. This is a $79 billion company. And that bodes well, I would imagine, for NVIDIA. Waste Management's down 1% after hours. I still don't have their numbers. Maybe they're a company that reports at 410 or 415. So we don't have Waste Management yet, but that one I'm very curious about to see if any volatility has happened in regards to tariffs, which I wouldn't think so, even if their trash cans are being tariffed from China, but still. Stream lagging. Are we good? Are we good? I think we should be okay. It's definitely not the internet and not a billion tabs open. So hopefully stream's not lagging too much. Someone said, Amit, what if Waste Management numbers are trash? I wish I came up with that sentence before you did. I really do. I could have stole it easily from the chat and acted like I came up with that myself, but that I wouldn't be able to live with myself at night if I did that. But I really did wish I came up with that myself. Here's another company, F5 Inc. I don't know what they do, but they've got earnings.
$1 million versus 719 expected. A non-GAAP EPS coming in at $3.42 adjusted versus $3.10 expected. I'll also mention the Q2 non-GAAP gross margin came in above expectations at 83.1% versus 82.8 expected. On the guidance, the range on the top line is well above expectations, 840 to 800, is 740 to 760 million. That's 750 at the midpoint versus 739 million expected.
Okay, so this is a SaaS security company from just looking at their website. I'm sure there's more to it. I think it's also cloud security. Not necessarily just cybersecurity. There's a couple different components to it, but they're raising guidance. Look at that, 740 versus 760 instead of 739 expected. And they beat on the top and the bottom. So another SaaS company like ServiceNow showing some decent results.
On the EPS, the range is actually below the expectation. They're targeting an EPS range of $3.41 to $3.53 versus $3.54 expected. I did speak with CEO Francois Locoh-Donou. We're going to hear more from him a little later this hour about the quarter. He pointed out they did also raise their full year revenue growth outlook and EPS growth outlook as well. So he stays confident in the trajectory and in the guide here, Morgan, just being a little cautious as well, but we're going to hear more from him on what's behind the quarter.
Dude, not bad. This is a $13 billion company. It seems like a lot of you guys know what they do in the chat. Load balancers. I've never really looked into but yeah, even though this company has never come up on my radar, right here, up about 1% after hours, again, $15 billion company, it is nice to see that there is a 260, there is an increase on the guide, which is what all these SaaS companies have been essentially been hinting that they were going to do. And I think Salesforce is going to crush it too. I mean, if ServiceNow is growing 20% year over year, AI revenues at 400%, you might see some really juicy SaaS revenues for the other companies. And this is another thing Ives has been talking about, this idea that people are leaving semis to go to software because it's safer. I think if you believe in the AI CapEx thesis, the semis are also safe. It's just, you've got to buy the dip on them, right? So maybe software is more tactical in the short term, but it's not like semis aren't a good play if you believe in, the data center thesis, which, by the way, let's talk about data centers. We have an update on that. But software in the short term might not be as volatile as the semis. Okay, I don't have waste management yet. Maybe it comes out in the next minute, maybe at 4:15. But until we get that, Microsoft. So there's been a lot of news around Microsoft going around about canceling their data center leases, right? I think this is some more clarity right here that we got. So Microsoft's data center freeze, 1.5 gigawatts self-build slowdown and lease cancellation misconceptions was published by SemiAnalysis, which is a consulting firm on semiconductors. According to the new report, Microsoft has frozen 1.5 gigawatts of self-build data center projects planned for 2025-2026. They also walked away from more than 2 gigawatts of non-binding leases, but still hold over 5 gigawatts under binding contracts through 2028. This is the headline that everyone's been talking about. I believe the data centers, if I'm not wrong, were in Ohio. And people were saying, well, CapEx is slowing down because Microsoft is pulling back their ability to build these data centers. In reality, they hold 5 gigawatts of binding contracts for the next 3 years. And apparently this is a person who works at the semiconductor, not the semiconductor, the I don't know how you would describe it. The inference training company Grok. I think that would be the best way to describe it. GROQ. His argument is that 5 gigawatts of capacity is enough for 2.5 million GPUs. So yes, we are seeing a little bit less spend on overall data centers from Microsoft, but the idea that they're just taking away the CapEx cycle, it's like, no, they have enough for another 2.5 million GPUs that they will have to be buying from NVIDIA, which is still going to be demand for NVIDIA. And then as AI models get better, as we get the next architecture over Blackwell, as Microsoft's cloud business grows and they need more AI workloads, they'll probably pick up more leases. So I think that headline that people have been using as an argument for a massive digestion phase around CapEx, I mean, maybe, but it's a little misleading because Microsoft already has a ton of infrastructure they're spending on, which is obviously good for VST and of Vistra and Vertiv, VRT, those core data center companies. VST right here up about 2.3%, and then VRT was down 1% on the day. Waste Management, they're down 0.5% after hours. I still don't have numbers yet from them. Let me see if I can get it again. Do they come out at 4:30? This one might be a late one. Yeah, I think this one comes out a little bit late, or it'll be coming out any second. But so far, no numbers on VM right now. What is your take on SMH? It is a legit semi ETF down from the highs by 30%. I like it I think anyone should like it if they believe in the story around data center build out and AI capex. Now, granted, I think there's some other opportunities. Like I would just buy NVIDIA over SMH, right? Now, but if you don't want to buy NVIDIA, if you want Micron and all the other companies included in, then you buy SMH. But if you believe there's an AI data center build out, you're long the semis. It's just, there's no other way to go about it. If you believe in the AI infrastructure being powered by the best in model GPUs, I think you buy NVIDIA, especially given some of the multiples that these ones are trading at. But if you hate them, then you can buy software, because software should definitely benefit from the AI revolution as well. And it just might be a little bit less volatile from the nature of hardware issues like margins not being the best for NVIDIA in this quarter going into the report in late May. Palantir right here down a little bit after hours, basically flat, 114.65. Again, was green on the day. What if Palantir is going to 120 going into earnings? Things could get crazy. Yeah, I mean, dude, if Palantir gets back to all-time highs going into earnings, I don't know what to expect. I really don't. The stock continues. I mean, the company continues to amaze me just by their execution, but the stock continues to be one of those things that I would say it's a good problem to have. You know, there's this funny Reddit meme of like, I got to find it, but it's this person. It's like the Simpsons character sitting on the bed with a bunch of money, and it's like everyone's pointing at him saying Palantir's overvalued. But I got it from Reddit. But the Simpsons character is just holding the money and with like a face of like, what did I do? Like I didn't do anything. All I did was buy the stock. You know, I didn't do anything. So it's one of those things as Palantir investors we're dealing with. It's like, all right, we probably know it's expensive. It's running a lot before earnings. But what are you going to do, right? You could sell if you want to sell. That's fine. You could buy some cheap puts to protect yourself. I mean, that's one thing everyone can do before earnings is buy some puts and try to protect some of the position. If the puts go to zero, then it's whatever. Or you just hold and continue to do what a lot of investors have been doing with Palantir for the past couple of years. Waste Management, again, no results on them. Basically flat after hours. This might be a stock that just doesn't have a big move, which is fine. But yeah, results are still not out for this one right here. CLBR, let's talk about this. So CLBR, this is a SPAC that was up 15% on the day. 1397 right now, it's 1363. So this has to do with Trump. So Trump's son tweeted about this stock, and the stock didn't really move on the tweet. However, if you look at the options flow a couple of days before he sent out the tweet, kind of feels like some people knew about it. So Donald Trump Jr. tweeted about CLBR, a publicly traded company, Columbia Acquisition, that's the name of it. It has zero options activity daily. In fact, its daily premium is often under $10,000. But in the last 3 days before Trump's endorsement, over $500,000 daily in call volume came in. You only knew about this if you were monitoring CLBR. Clearly, it seems like someone was getting in before the endorsement, and this is a very easy example of seeing someone front load the trade, because why would a stock that has $10,000 of daily premium and option flow end up getting 1.5 million over the past 3 days? Now, what does this company do? Well, more importantly, what did Trump Jr. say about this? So, oh, wow, this was the tweet. Okay, so I didn't see the tweet yet, but this is what he tweeted. Some of you saying you got in on this thing. Big things coming for grabagun.com. This is a SPAC for a gun company. One of the most exciting pro-Second Amendment companies out there. Stay tuned. Ticker symbol CLBR. Huge for American patriots who love the Second Amendment. It looks like this is a SPAC. It looks like it's a SPAC for a gun company. Grabagun.com. Okay, we'll go back to that. Waste Management. Are we moving? Waste Management, we are down 0.5%. It's not moving too much. Let me see. I think the results are out. Grabagun.com, huh? That's an interesting one. No, dude, where are these damn? Yo, you know what? Do you guys remember this happened last time? We were on till 5:30. The numbers didn't come out. I ended the stream and then they came out at like 6:20. You guys remember that, right? Some of you guys might remember this. This was like 4 months ago. Waste Management took forever to come out. I don't think we're getting it soon, dude. Maybe this is a company that just reports later. But anyway, CLBR looks like it's going to be a SPAC for a gun company or a company where you can buy guns online, which I don't even know exactly how that works out. But if you can do that, then it looks like Trump Jr. is supporting it. Someone said they missed. I still don't have the results yet. Yeah, one stat about Waste Management. Their EPS is CAGR 10% since 2010. 10% since 2010. So every year they've given you 10% earnings growth for the past 15 years, which is pretty damn incredible. This is why it's always been a stock that's just paid a healthy dividend and been a holding in many different portfolios here. Yeah, I don't have the earnings. I think this one's either going to not show up for the next hour or it's going to show up randomly. It's so weird. And on their website too, they say 4:30 or they say 4:05. Let me pull up their website, see if we can get the exact price. That's weird, bro. Earnings is definitely today, April 29th. Oh no, the call is tomorrow, 10 a.m. That's why the earnings are late. Now I get it. Their earnings are always the day after at 10 a.m. So that's why they don't need to put it out at 4 p.m. because they're not doing the call at 5 p.m. Okay. So yeah, we're going to have to wait for this if we get it today. If not, then, we're going to get it today, but if I'm live, we'll see it. If not, then we'll let that play out. Dividend yield of 1.4% right here on Waste Management. James, thank you for the $20 super chat. Hey, Amit, could you please show us your credit debit spread for SoFi? I just started watching you in February and it's done wonders for my portfolio. Much love from Vegas. James, thank you for the super chat. Thank you for being here. We're going to be in Vegas probably around September, October. So definitely we'll be doing another meetup there. In terms of the call debit spread, so when Jason and I do our third series of options, we're going to go a lot more in depth and talk about it because it'll be like more of just like the nitty gritty nuances of it. But essentially it's buying a call and selling a call on top of each other. So you can buy a call and you pay the premium to assume that a stock gets to a certain level by a certain date, or you can sell a call to assume a stock doesn't get to a certain level by a certain date and you get the premium. So when you pay up $1 in buying the call and you sell a call and get 50 cents in premium, your premium goes down by 50 cents, right? Because $1 minus 50. So your net debit that you pay is 50 cents. And all it does is essentially create a little bit of a safer way to go long on a option position without having the volatility of the stock going down dramatically, because then the call that you bought is going to go down a lot, but the call that you sold is going to go up a lot in value. So it's kind of hedging your long call with a short call, and you can cover the short call with the long call. That's what allows you to create a call debit spread and doesn't allow it to be a naked call, which is a bit more risky that some people tend to do. So we'll talk more about it on that options episode, which hopefully is like in another week or two. We just got to get Jason's schedule. I've also been traveling, so I haven't been able to do it, but we'll talk more about that as we get into that episode. This is the 201 link. Thank you, Zocold, for that. If anyone wants to check it out, that's the 201 link. And the 101 is in the description of that for options. I did not do 1525. I did 1520. So this is what it looks like on Hood. I did 1520. I paid 35 cents, which if you multiply by 100, because I bought 100, that is $35. And so I paid $3,500. The contract is worth $1.23, aka $123. So we're up about $8,000 on this. Now, if SoFi gets to 20, the way you calculate the call debit spread is the width of the spread divided by the premium you paid. So 20 minus 15 is 5. 5 divided by 0.35 would be a 1,400% return. So we'll take 3,500, turn it into 50,000 in about a year, which I think is a decent trade. But SoFi's got to get to 20. And if SoFi doesn't get to 20, then that is not going to happen. Now, granted, I could sell it right now, and SoFi doesn't literally need to get to 20 because we're so early in the contract's life cycle. We still have 6-7 months, but until it plays out. So I can sell it right now and make $8,000. But to me, I'm like, if I lose the 3,500, it's whatever. It's not going to kill me. But if I make 50, that would be very nice. So it's up to SoFi to see if they can actually put up the results. I think that's what we have from earnings. We can move on to some other stories right here. Let me see if we have any other earnings to look at. Waste Management's just going to take some time to get to. And if not, then we can move on from that. Yeah, we can move on from that. Okay. Oh, actually, let's listen to this right here. So, we got NXP. Okay, we have NXP. This is another semiconductor company, $50 billion. And then we have Stacy from Bernstein, who is one of the best analysts on semiconductors. Let's take a look at this, and then we'll get into some other headlines that we have today.
2.84 billion. Their automotive segment continues to be their powerhouse, making up almost 60% of their business. But revenues.
Oh, this one's getting hit. This one's down about 5% right now. NXP.
Did come in a little bit light at 1.67 billion. Their non-GAAP gross margins also a little bit light for the quarter. And interestingly, for Q2 guidance, EPS was in line. Q2 guidance for revenue slightly higher. The big change, though, the company announcing a change of management. CEO Kurt Sievers is going to retire at the end of 2025. NXP's board of directors announced that it has unanimously approved Mr. Rafael Sotomayor to succeed as president effective April 28th, 2025. They're both going to work together to orchestrate a smooth leadership transition until mid or end of October. There's one line that stuck out to me in this release coming from the current CEO, taking more of a cautious tone, saying, quote, "We are operating in a very uncertain environment influenced by tariffs with volatile direct and indirect effects." So you've got a CEO change and then obviously concerns about tariffs weighing on the stock right now, down over 5%. Guys?
All right. Christina Partsinevelos, thank you. For more on NXP, let's bring in Bernstein senior analyst Stacy Rascon. Stacy, great to have you back on the show. Let's start right there. Your reaction, your initial reaction to NXP.
Yeah, I mean that's kind of what it is. That the revenues were kind of in line-ish, although as she said, auto and actually even industrial were a little light relative to consensus. Beats on mobile and comm, which I think are less attractive. Gross margins just a hair light both in the quarter and in the guide. Channel inventories actually went up a week. They're at 9 weeks, so some of the revenue actually was shipping into the channel. And again, we have the CEO transition amid a period of uncertainty. It's probably not enough. I'm not surprised the stock's down a bit.
Are you?
All right, NXPI looking like they have some tariff issues. This is definitely something that's going to be weighing on the hardware companies in the semiconductor space. That one getting a nasty one. I've got to do more research on NXP and Cadence. I don't look at them too often, but Cadence is relatively flat. NXP right here, NXPI is the ticker. That's down about 7%. Cadence now down about 2%. Teradyne, this company, I don't see their earnings. Let me see if I can get the results right here. This I also have no idea what Teradyne does. Teradyne. I feel like I've heard of this name before. Manufacturing automation across industries. It's an automation company. Okay. Manufacturing automation. They do robotics, semiconductor testing, wireless testing. They look more like a hardware company versus a semiconductor company. Or sorry, versus a software company. Kind of feels like they're in that same space as some of the other semi names as well. Also potentially in the robotic space. Don't have their earnings yet here. Small company compared to the other ones. They're up about 1.5% after hours. Ticker symbol TER. Looks like we might have to wait a bit to get their numbers as well. And then Waste Management probably is coming out in about an hour. All right, cool. Not crazy. They do test equipment for chips and robotics and AI. All right, so, I mean, one of the companies that's probably going to theoretically get more demand from the robotics revolution that we're seeing as well right now. So this is definitely one that should be more on our watch list. Speaking of robotics companies, again, the main headline for the day is that Figure is in talks potentially with UPS, which is a massive company across the world that does deliveries, particularly in the United States. They have a huge business. And so it looks like, according to Bloomberg, UPS is in talks with Figure AI to deploy humanoid robots. A lot of companies in the humanoid robotic supply chain will benefit if Figure has to make hundreds of thousands of bots for UPS. But we've got to see if the company confirms this, and that would be a very, very strong thing for Figure. Okay, for all my people in Spain and Portugal, what's going on with the electricity? I think Spain declared a state of emergency. I think a decent chunk of it has come back to people, but it seems like those issues are still prevalent here right now. We don't have a reason for why the power came out. Someone said they just got power in Portugal and they came to a midstream. I appreciate you, brother. It's not a cyber attack as per now, so it's really weird because if it's not a cyber attack, how did the infrastructure just like cripple for the entire day? Alberto says there's not a reason. I mean, that is kind of sus, don't you think? An entire country losing electricity. I mean, imagine if that happened in the United States, dude. That would be crazy. So that is pretty bad. Waste management, by the way, down about 1% after hours. I don't have the results yet, but once we get it, I will show everybody. It was an atmospheric event. It was a weather thing. You know, I mean, that's not crazy to assume. It could have been a weather thing. I think we need some more updates on that, but so far it's not seen to be a cyber attack or attack on the grid or anything like that. All right, cool. So that's what we got with that. All right, here's another headline that we're looking at right here. This one was interesting. So this was legislation that was already introduced back in 2023, but Josh Hawley is reintroducing that legislation. And it is called the Preventing Elected Leaders from Owning Securities and Investments Act, aka Pelosi Act. This is got to be the most hilarious thing ever. But so there's a reintroduction of this act after it was already introduced in 2023, got rejected, didn't really get enough votes. Now it looks like Congress, especially because Trump said he supports Congress people and elected officials not owning or trading stocks. Now he said that, granted, we got to see if he actually pushes that legislation forward. But I mean, if the votes come in, then maybe there's a shot that the Pelosi Act is passed. I don't think it's going to get passed. I think these Congress people, maybe I'm too cynical, but I think they're a bit too greedy, especially when it comes to stocks. Again, the whole reason people don't want them to own stocks is because of the insider information they have access to, which given the tight regulations we have to insiders and actual companies, you would imagine you have those on your public officials as well that are privy to lots and lots of information. But I think they're too greedy. I think there's like the AOCs of the world and the Josh Hawleys of the world that can agree on this stuff. But then you got a lot of middle of the road senators and Congress people that are just not going to vote for something like this. So, I mean, that's part of the reason Trump might say he supports it because he knows it's never going to get the vote. So there's no downside for him to say he doesn't support it because it sounds like a virtuous thing to say. But the reality of it actually getting passed is a bit unlikely. So Zokold says they should have limits not completely gone. It gives us hints. My argument is let them trade, but they need to disclose within 30 minutes. Like, I don't really care if they trade, bro. Like, it is what it is. Like, if they're gonna do it, they're gonna do it. But just let me know. That's all. I just want the info. As long as I have the info, it's whatever. Because then it's not really that much of an insider trade if they, because if they have to wait 45 days to tell you, then it's like, all right, like they had 45 days for the alpha. 30 minutes. I mean, I feel like people could make some money with them. But that would be my solution to it, because I just don't believe they're actually going to vote to get rid of it at this point. All right, cool. So that's what we had in terms of the Pelosi headline. All right, take a look at this. Now, this was also very interesting. We talked about China a lot in the morning, and in particular, ports in California that are seeing a 44% reduction in cargo ships going through their ports, which is a telltale for potentially a lot of products not being in the United States. Will those be important products? We don't know. But as of now, we can definitely assume there's going to be a decrease in some of the shipments from China, which is the intent of the tariffs in the first place. So that makes sense. We also heard from the Dallas Manufacturing Index that business activity overall came in at -35 versus -16 expected. So that was another thing showing that demand is starting to come down. Here's another piece of news. China's cancellations of U.S. pork shipments are skyrocketing. China canceled shipments of 12,000 metric tons of U.S. pork last week, the most since the 2020 pandemic when global supply chains were halted. As a result, overall U.S. pork export sales dropped to their lowest level since October, according to Bloomberg. This comes as American pork imports to China now face a massive 172% tariff. I didn't know they were tariffing the pigs at a 172%. But they are. And this also includes the duties first imposed during the 2018 trade war, which means that tariffs have officially hit American meat exports. I've got to do more research on how much meat we export across the world. But apparently to China, we export a decent chunk of pork. And based on the 172% tariffs, China may go somewhere else to end up getting their pork. But we are seeing the trade war again continuously accelerate in terms of the sort of back and forth going with all these other companies. Shein starting to raise their prices on regular things by over 370% to make up for the tariffs, and even showing an import tariff duty on people's checkouts. I mean, you would imagine people are not going to be paying as much as they were paying before. The reason they liked Temu and Shein was because they were so cheap. So if that is the case, then I think we're going to start to see Temu and Shein and some of those companies lose some momentum. Now, that's not really that important for us as like American investors outside of Meta and Google. Temu is the #1 ad spender on Facebook. So like you might not own Temu or Shein or Chinese companies that have stakes in those individual retailers. But if you own big tech, and big tech gets a lot of advertising dollars from China, that may be reduced and come down. Now, granted, this is kind of what Trump wants. He doesn't want Temu to spend $1 billion on Facebook ads and then make $5 billion back in ROI because they can sell these cheap goods. Like, he wants that to stop. So if you're a Meta Google shareholder, or just like in general, you're in the sort of advertising tech space, you kind of got to deal with that hit. And I'm going to be very curious to see what Zucks has to say. I'm sure he's going to be asked about the idea that Chinese ad spend in particular is going down. Because although Facebook's not allowed in China, Chinese companies are definitely allowed to use Facebook for advertising. And that may be something that we have to look at when we get into Meta's earnings later this week as well. Now, someone makes a good point right here in the chat. One thing about the shipping containers, there is a bit of nuance I should add to this. There's a lot of doom and gloom headlines of, oh, we're going to lose all this inventory. We have to remember that from September to December, one of the reasons why inflation started to take up a little bit is because companies started importing massive amounts of product. Why? Because they were afraid of what's happening right now, the tariffs. So it was a good bet if you were a Walmart and you imported 10,000 more TVs from China before having to pay 145% tariff or whatever it is on those TVs now. So there will be a backlog, I would imagine, on the overall level of inventories, at least for a couple months, given companies in the United States imported so many different products in Q4, which is actually what's messing up the GDP estimates for Q1. But eventually, if the trade war, I was looking at StreamYard, that's why. Eventually, if the trade war doesn't end soon, there will be an inventory issue. And the question will simply become which inventories are going down, and are they like importing goods for people in the United States? So I don't think it's going to be that crazy to imagine that imports come down and like, yeah, there will be some empty shelves, but those empty shelves are not going to be empty tomorrow, given we have so much of an inventory backlog. But then again, if demand gets destroyed, that might also delay the inventory backlog. Like if Walmart has these 10,000 TVs, let's do a more realistic number, 10 million TVs they imported over the past 3 months. Let's say they sold 2 million of those TVs and they've got 8 million left, and they assume they can sell another 8 million over the next couple months, but then people stop buying big TVs because the demand starts to go down. Maybe it takes a while before the actual inventory glut starts to hit the consumer, which is not a horrible thing for inflation, by the way. That's actually really good for inflation. However, if the trade war ends before the inventory glut hits the consumer, then that's actually a win-win, because then there won't be an inventory glut. I've got to do a lot more research on which inventories do we have in excess or not. But in general, that's what I think is the nuance to that headline right now. Yeah, there will definitely be a Memorial Day sale if these tariffs continue the way they are. Okay, Waste Management does not have their earnings out yet. They did this last time. I think realistically, this one comes out at like 6 p.m. or something. So yeah, we might not be able to see it right here. The call again is at 10 a.m., but it looks like the earnings don't come out that quick. Here's an update on treasuries and the amount of money we're borrowing. We do have some updates on that, and we are expecting to borrow a lot more money to finance everything that we have in the economy.
Breaking news from D.C. from the Treasury. And for that, we go to Megan Casella with those details. Megan?
Hey, Scott, so the Treasury Department is out just now with its latest borrowing forecast. They're estimating they'll need to borrow $514 billion for the second quarter. Now, that is $391 billion higher than the initial forecast from February. Treasury says that's largely due to a lower than expected cash balance to start the quarter. They ended Q1 with just $406 billion in cash on hand when they had expected $850 billion. Agency officials told me that was because of debt limit constraints. Those have forced them to spend more cash rather than keep a week's worth of funding needs on hand in cash like they typically would. And Scott, Wall Street had been expecting the borrowing estimates to rise, but 514 billion is higher than any of the forecasts I had seen. So that need for further borrowing is putting a little pressure on yields. The 10-year is around its lows for the day, about 4.2%. Now, looking ahead, Treasury says it expects to borrow $554 billion for the July through September quarter and to beef up that account balance to end the quarter with $850 billion in cash. But again, that could change significantly depending on what happens with the debt limit in the coming months. On Wednesday morning, Scott, we'll get more details on the auction sizes expected here and the breakdown in tenors all along the curve. In recent years, as you know, that release has had the greater impact on the market than this one. Scott.
Was there, Megan, any expectation at all that any of the tariff revenue that's coming in now would potentially make for a smaller number than we just got?
It's possible we see that in the future. I think it's a little too early to see that now. Agency officials were asked about that, and they said all of their forecasts, while they don't get into individual line items, do take into account the forecasted tariff revenue. But that $554 billion for the next quarter, that takes into account that there will be some increase in tariff revenue. They still think they would have to borrow that much.
All right, Megan, thanks for that. Megan Casella outside the White House.
So we're broke. We're broke, man. We got to borrow another 300 billion than what was expected. I mean, it's a very, the reason people, I think, become Bitcoin maximalists to an extent is because they see the debt issue we have in this country and the insane levels of spending. And the implication of that is that fiat currency gets debased and overly printed because of the necessity to be able to fund the government and fund our country with this type of currency. Now, granted, it gets to be the world's reserve currency as well, but still, I mean, you could understand how people just say, I need a new form of money with stuff like that. And Doge, as promising as it seemed like a month ago, I think the hype on Doge has died down. I mean, have you guys felt that? Like we don't see that many contracts getting canceled. Elon took the expectation from $1 trillion down to $150 billion. I mean, yeah, we increased our spending and we're going to pass some pretty aggressive tax cuts soon. So the only way, this is why I feel like you kind of have to be bullish on AI. Like one of the only ways I think that we can somewhat resolve the issues we have from a fiscal perspective is growth. Lots of it. More growth than you could imagine. Like we need a lot of growth at the end of the day. And maybe that helps us resolve some of this stuff. But realistically, we have to stop the insane spending. And it's just hard. Because if this administration can't do it, where you've got Elon and Trump and all of his people trying to, I find it hard to believe that other administrations are going to have the control, the sort of I don't give a F attitude that Trump has and that Elon has to get it done. But even Elon's probably recognizing, dude, it's probably really hard to cut $1 trillion worth of spend, even if it's a noble virtue to live up to. It's just not going to be easy. So do you think the tax cuts will pass? Yes, 100%. First of all, it's going to pass through reconciliation, which is another way of getting something passed without getting 2/3 of the vote. That's how they got the 2021 Inflation Reduction Act passed. It was through reconciliation. Kamala, given it was split 50-50, was the deciding vote as the VP to get that over the finish line. So even if you don't have 2/3 of Congress voting on the agreement to decrease taxes or to sort of permanently create the 2017 tax cuts into law, they're going to find a way to get it passed. And I think that's going to be a really important thing for the Trump administration and their agenda. Now, again, they argue, hey, we can get it passed if we can at least grow out of it because tax cuts lead to more growth. The question is, how much growth do we realistically need to be able to make a dent in the deficit? And I think no one has the best answer to that right now. Let me see a couple of other headlines we have right here. So we do have Trump live right now, but he's, I don't know if anyone wants to. I mean, we could go to it for a couple minutes, but he's, oh no, it's already done. Yeah, it's done. Okay, so he's not live anymore. It was for the Super Bowl champions. So yeah, that probably doesn't matter anymore. I doubt they talked about tariffs or anything like that. So yeah, he was with the Super Bowl Eagles champions. By the way, the Eagles, if you look at a chart of every time the Eagles win, we get into a bearish market. So if you want to blame the Eagles for all of this, you can blame the Eagles. But if you're a Philly fan, you're probably happy about this. New DoD contract with Palantir. So it's not a DoD contract. It is with ICE, but we already knew about this. So people are reporting it right now. But I mean, if you follow the channel or you follow me on Twitter, we've known about this. So this was revealed like 2 weeks ago that they got a $30 million contract from ICE. It might be official now, and that's why some of the other mainstream sources are finding it. But yeah, Palantir got this contract a couple weeks ago, and most people, if you keep up with Palantir, should have known that by now. Another 30 million. Look, 30 million is not a ton of money, but rather I think it's just Palantir getting ingratiated more into the government. They're going to need a lot of these $30 million contracts to get that government growth to be as strong as I think it can become, which could justify that 40% growth year-over-year target that I made in January, which I think, we'll see what happens in Q1, but I think it's possible. But it's less about the money. It's more so about the fact that they are just being used in so many different areas at this point, which is important. By the way, the CEO of NXPI is stepping down. That's probably another reason this stock is down 8% right here. I think I missed that news. So if he's stepping down, that might be leading to some pain. Waste Management, again, their earnings are still not out currently yet right now. Okay, let's talk about SoFi. Let's talk about SoFi. So we got earnings coming up tomorrow on SoFi. We'll talk a little bit about a bunch of these companies that we have tomorrow. Well, let's focus on just tomorrow's earnings. So SoFi, Grab, Spotify, some of these names, and we'll do a little bit of a preview right here. I'm going to put in the chat. Let's see what people think. We'll do this poll again later, but SoFi, pump or dump tomorrow. What do you guys think? SoFi, pump or dump tomorrow. What do you guys think? Can we talk about NVIDIA next? Yeah, we'll talk about NVIDIA as well. Oh, I didn't even put the poll in. Sorry, put the poll right here. Here's my thoughts. YouTube saying an error occurred. Give me 1 sec. Let's try it again. My thoughts are pretty simple on this. I think we're going to get a pump. And I think the logic of the pump is going to be primarily based off two things. Number one is the loan platform. If Noto is able to meaningfully pump this loan platform, then I think we get some love. And I think the market starts to pivot a little bit on SoFi's asset light and risk light balance sheet that is able to still monetize the assets or the loans in a more meaningful way. So I think that's number one. And then number two, I think their member growth is going to be strong. We got the rumors that they got 11 million members. It seems like it's going to be their best quarter ever at about 900,000 members added. Stock was up 2.4% on the day, probably based on those expectations. 94 million shares were traded today. So it looks like the excitement is there for this one. I think the way they dump is if two things. Noto doesn't communicate to the market for whatever reason why SoFi is crushing it on all cylinders, which I think they will crush it on all cylinders outside of the tech platform. So that might just be a communication issue. Or for some reason, they don't beat on EPS, which I think they will. I think the street wants 3. They come in with 5 cents. That'll be a good beat. Now, granted, they pump every time and then dump right after that. I know a lot of you guys are saying that here in the chat. We'll talk more about Hood earnings tonight on the weekly. So tune in at 9:30. I'll give you guys all my updated numbers about revenues, assets under custody, all that stuff. Tanner and Roy will have their numbers. So we'll spend a good chunk of time tonight talking about Hood earnings. But that's on Wednesday. In terms of SoFi tomorrow, I mean, I don't see a reason for us to dump, especially because last time we were trading at 18. Now it's at 13. What, is it going to go back to 10 again? Like April 8th prices, Like I feel like the risk reward here should be asymmetric. I would buy shares, not options, if I was playing earnings, just because you never know. Especially if Trump tweets something tomorrow, then the macro turns ugly, like that could hurt them. And also, yeah, last time they reported on a really bad day, I forgot what happened, but it was something macro driven that was just really crappy. And so I think there's a shot that tomorrow ends up being a good day. And it should be able to get some more momentum. Also, crypto should be coming back. A lot of people are finding different things around the code base that crypto is coming back soon, which would be a nice little pump for them. Now, granted, I don't know how many people are going to buy their crypto on SoFi, but I don't think it matters. As long as there is some level of trading volumes. And Tanner had a good point. He said SoFi should just like undercut Robinhood massively. Like Robinhood charges a 0.6% take rate. SoFi should charge like a 0.2% take rate. Because SoFi doesn't need to make money off crypto. It'll be inconsequential to their overall revenues and earnings. But if they can steal people away from Robinhood, which Robinhood has been stealing a lot of people away from SoFi, so if they were able to reverse the script, that would be a pretty bullish tactic for them. The question is, would they go that route? And usually that's what tech companies do, right? They undercut you, take your margin, get the users, and then they monetize later. But SoFi has historically not done that. So if they don't go that route and they try to take a high take rate, I think the experience, which I've consistently said the experience just is not the best on the SoFi product, that might lead people to pick something like Robinhood or Coinbase instead of SoFi for their crypto needs. So we're going to have to see how that plays out. Lutnick is on tomorrow at 2 p.m. on CNBC. We haven't heard from him in almost 3 weeks, like in a major interview. So I'm curious why they're getting him on TV tomorrow. Everyone's saying this is bearish. I kind of think there's something bullish to this, because why would they get him on TV unless it was to underscore a big announcement or deal that the administration has made? Besant, again, is going to be live at 8:30. I mean, maybe they announce a big deal, and then maybe Lutnick tries to go on the victory parade and continue to explain why the strategy is working. But if not, then make sure to watch out for 2 p.m. Eastern, because we're probably going to have to deal with whatever Lutnick says. Here's what Ed Yardeni has to say about the current landscape of tariffs and the picture in regards to earnings.
Ed Yardeni for more on what he's watching. Welcome back. It's good to see you.
Thank you, Scott.
Get to the Fed in a second, but just your view right now of this market, which has rallied back pretty hard. Now what?
Well, I think the market's been choppy since the beginning of the year, mostly choppy to the downside. Now maybe we're going to get, well, in the past week or so, we've had a lot of chop to the upside. I think it's going to remain choppy. I think the trade issue is still going to hang over the market through early July. Certainly the issue with regards to China and what that implies about price inflation in the United States and empty shelves in stores. So I think at this point, is the choppy is probably the way to describe it. But I think the market may actually be doing what it's supposed to be doing, and that is looking out beyond the next week or month. I think it's actually starting to think about 2026 and anticipating that a lot of the craziness will be behind us.
I mean, you really think any part of this market activity that we've witnessed in the move back up from the lows has to do with that? I just feel like it was oversold. We're coming back. We're not sure what's going on. And we can't even look, 5 yards ahead of us. I have a hard time believing we're looking 10 months.
No, it's a good question. Look, I think that historically corrections tend to occur when investors worry about recession that doesn't happen, and bear markets occur when the recession actually happens. I think that we've seen a correction. I think we made the low on April 8th, the day before the postponement of Liberation Day for 90 days. I think the market at that point started to anticipate that maybe there wouldn't be a recession. There might be a slowdown in the second half of the year, but to the extent that this turns out to be a correction, which is what I think it's turning out to be, then I think the market's confirming my view that we're going to get a soft patch in the second half of the year and an improvement in 2026. So, look, I think the market does look forward. It does look ahead. People look at valuation multiples and how they've come down and ask themselves, well, now that things are a lot cheaper, does this make sense relative to my outlook for the next couple of years?
Maybe we're just looking ahead and anticipating rate cuts. Maybe that's why bond yields have finally started going lower in anticipation of that, while the stock market is just going to see what the data is, see what the earnings are, and then listen to Powell and company.
Yeah, well, there's certainly a debate between Powell and company and some of the dissidents or dissenters that seem to be coming to the fore. Governor Christopher Waller has indicated that he's ready to lower interest rates sooner rather than later, whereas Powell and company have expressed the view that they're in no rush to lower interest rates at all. And I think they still have an inflation issue. I mean, we just had the Dallas Fed data come out today. We now had 5 of the regional business surveys, and they show a very big decline, weakness in the activities index. But on the other hand, the price index is really picking up. So it's a stagflationary environment. And I think the Fed has to be very concerned about fueling inflation. So I don't think they're going to be in a rush to lower rates. And that may, again, add to the choppiness. The market's had a history over the past few years, Scott, as you know, of anticipating rate cuts that don't happen.
Look, I think the Fed should be cutting, but yes, I also agree we're not going to get the cut, even though I think the Fed needs to start cutting, given that the tariffs likely will be a bit more deflationary. We're a month into the tariffs. We're probably going to be a couple months dealing with the tariffs at these levels. Hopefully not, but if we are, demand will come down. We got another headline here right now, folks. This one, well, it's every day something new. There is a new club that's being started called the Executive Branch Club in DC. And it is led by David Sachs and Tyler and Cameron Winklevoss, along with Donald Trump Jr. And you have to pay $500,000 to get in. So here's the update.
Exclusive club that has popped up in Washington, D.C. Donald Trump Jr. and other Republican mega donors are at the helm. And Robert Frank has more on who is looking to join and just how much it'll cost you. Robert.
Good morning, David. Good to see you. Well, the ultra wealthy who want access to the White House have a new club. It's called Executive Branch, and the new private members club will cost $500,000 just to join. And at that price, there is already a waiting list. The club is owned, as you mentioned, by Donald Trump Jr., the president's son, along with his business partners at 1789 Capital. That's Omid Malik and Chris Buzzkirk. The other owners include Alex and Zach Witkoff. Those are the sons of Steve Witkoff, the Middle East envoy and longtime friend of the president's. Some of the founding members include crypto investors David Sachs and the Winklevoss brothers. I'm told that the club will be located in Georgetown in a building that will open next month. Now, the launch party on Saturday night included a who's who from the Trump cabinet with Secretary of State Marco Rubio, Attorney General Pam Bondi, SEC Chair Paul Atkins, Dr. Oz, and a lot of others. The $500,000 membership fee would make it the most expensive private membership club in the country after Mar-a-Lago. Mar-a-Lago, of course, just increased its membership fee to $1 million. And even there is a long wait list. Now,
So this is obviously the insider trading club, right? I mean, got David Sachs, Donald Trump Jr. By the way, speaking of insider trading, or rather speaking of groups of people getting together, there was a massive article that came out the other day from Semaphore. I think it came out last night, and I was reading through it, and it's just incredible to kind of look at this thing. You guys probably haven't seen this one because it hasn't gone super viral, but it is incredibly interesting right here. Semaphore got a bunch of group chats that were leaked. So it's called the group chats that changed America. And some of these group chats are pretty damn incredible. These exclusive clubs, right? That have all this information. So the article focuses on Joe Lonsdale and Balaji, which are Balaji was the former CTO of Coinbase, Joe Lonsdale, co-founder of Palantir, and Joe Lonsdale pretty much despises the CCP. Balaji is actually thinking that, hey, we can learn some stuff from China. So they went back and forth in the group chat, and like there's some leaks there. That stuff's not the most interesting, but there was a couple of screenshots from the group chat of people leaving, which was actually hilarious. Like you know when someone leaves a WhatsApp group, it shows you that like XYZ person has left the chat. And there was this one picture of, I think, David Sachs leaving one of the group chats. Is this here? Yeah, here it is. This is hilarious, dude. Look at this thing. Look at this thing. So these are 300 people in a group, right? David Sachs says this group has become worthless since the loudest voices have TDS. Eric Torenberg, you should create a new one with just smart people. Eric Torenberg is a guy who runs a bunch of media in Silicon Valley. And then Brian Goldberg says, I'm not sure we have TDS. I think we Republicans who supported Trump are seeing that this is a failed administration. David Sachs left the group. Tucker Carlson left the group. Sean McGuire, another Trump supporter who's a VC, left the group. And then Tyler Winklevoss of the Winklevoss twins left the group as well. I mean, this is hilarious, bro. This is absolutely hilarious. So as soon as the group on Signal, I believe, started to report, or a lot of people started to like question the administration, some of the biggest supporters, like a Sean, Tucker, David, they just, they left the group chat. So we're starting to see this sort of ideological split between people who either believe in this administration or don't believe in this administration. And I mean, that split is hitting not only Americans with their families and friends, but also with people in these exclusive group chats. It's a really interesting piece. I recommend people reading it. I don't even think there's a paywall on this, so I'll put the link right here in the chat if you want to read it. But yeah, polarization continues to be a massive issue when it comes to, the current state of the Trump administration. You either believe or you don't. I think the objective thing is to critique when necessary and then give praise when necessary. But it's obviously creating a lot of ideologues in terms of how Trump is approaching this term. Okay, so we talked about SoFi in terms of earnings. We also have a Grab tomorrow. I'll talk more about it on the market open, but I think Grab should crush it, dude. I think Grab's going to crush. I don't think that Grab is going to put up a crappy quarter. And if they do, I'll be pretty disappointed, to be honest. Like I have high expectations for this. I don't think the stock has to jump like 30% or anything, but I think we should be green tomorrow. And I think there should be little headwinds for us to maintain momentum. The biggest red flag that we could get tomorrow on earnings is that margins get worse, which means their pricing power is getting worse, which means the company's moat is going down. Because at the end of the day, you can have all the revenue, all the GMV in the world that you want, but if you can't inch a profit out of that, you've either got some massive cost issues or you just don't have the pricing power to be able to charge something that creates a margin, which is why we're seeing some of these businesses go viral because they can't pay the 145% tariff because it takes away all their margins. So their EBITDA margins right now are not the best. I think they sandbagged in Q1 in terms of their overall EBITDA guidance. They guided for 450 million. I think they're going to guide up to like 470 to 500 million. And if we get a 20 to 30 million increase on the EBITDA guide, when you just look at the multiples, you get closer to $5.56 on the stock. Every analyst, by the way, has a 575 to 630 target. I think the top is at 630. No, Mark Mahaney has $8, and then every other analyst is around that 550 to 620 range. I don't think the stock should be trading at 470. I really don't. I think we should get some more momentum. Again, the company has freaking $7 or $6 billion in cash. Every 33 cents you're buying per dollar of Grab is cash, So I think at this point, this one is becoming obvious, even on Sam's comments. So Sam right here put up a post on Grab's market cap relative to its cash, 5.68 billion right here in cash. And I think this is not even including their deposits, which would add another billion to it. And I said, she's a pretty nice sting, eh? I think all the Crodies need to get into this one. So I just think that this one should outperform. And if it doesn't, I'm going to be a little disappointed. Unless there's a good reason, like they bought some company and they have to take some goodwill impairment charge or whatever. But outside of that, I think this is going to be a good quarter. And as long as they do, then we should have some momentum here for Grab. Grab is not in 17 days. Grab is tomorrow. Grab is tomorrow. Besen speaks at 8:30 tomorrow, so I'll probably be live at 8:30, and we'll be covering what we got on Grab. Fartcoin also had a good day. Up about 2%. It is worth more than 85% of public companies right now. Fartcoin, as you can see, it's $1.1 billion market cap. I mean, it's pretty damn incredible. But yeah, this one continues to be a relatively decent hedge, which is crazy for me to even say. Outside of that, I think those are the main headlines. We don't have Waste Managers earnings yet. I believe that should be out probably in 20 minutes. Here's the kind of last thing I wanted to do today, and then if we get Waste Management, I will give you guys those earnings. Tom Lee put out a new video on his YouTube channel, and I wanted to watch that. And he goes a little bit more in depth on what's going on in the market and why he thinks we have hit. So I think we can take a look at that, see what he has to say. And then we'll see what happens with Waste Management. What time is SoFi earnings tomorrow? 7 a.m. 7 a.m. Grab is at 8 p.m. So I'll be live at 7:30 tomorrow. Tomorrow's going to be a long day. We'll have the market close, probably take an hour break, and then we'll be live for Grab. So Grab's going to be late at night because it's a Singapore company. SoFi's in the morning. And then the other companies that are reporting, let me just pull this up right here. I'll give my very quick thoughts on these. Most of you guys already know my thoughts on them. Snapchat is tomorrow after hours. I have a swing trade on that. I think Snapchat's going to be good. Maybe I'm wrong in it, but I think Snapchat is okay. I'm in at 870. We also have Spotify tomorrow. I think Spotify is going to be okay, even if they have to show some decrease in growth or decrease in margins based on some of their new cost structures they put up. But I think they'll be all right. I don't know if it has to pump, but I think that whole recession resistant narrative that Netflix was getting, Spotify could get. PayPal, I have no idea what the hell's going to happen. I'm assuming a pump because PayPal's just been beaten up. So I would imagine PayPal gets some love. Coca-Cola, Pfizer, UPS, I think those could be flat. Altria Group, that'll probably be flat. It's been doing well this year. BP tends to be flat. Maybe they have something as a surprise. But the main ones in the morning are SoFi, PayPal, and Spotify. And SoFi and PayPal will be covering a little bit early. Then after the close, again, we have Snapchat. I have a trade on that. Visa, which I think should be okay. They're probably going to talk a little bit about some of the tariff volatilities in the context of all the different payment processing, essentially volumes that they're either seeing decrease or increase. This is Q1 before the tariff, so it's going to be a good increase if the guide is decent, which again, if demand is going down, the guide shouldn't be that good, right? The guide should probably be kind of trash if they think that people are going to stop spending. So that's going to be important to see. And then we got Starbucks and First Solar. FICO's a big one. BKNG is a big one. Starbucks, I think they need to have a new plan now that they have a new CEO and get the market to believe in that plan. And then First Solar, we're going to see what happens in the overall solar sector. Enphase had a bad one. So we got to see if the same thing happens with First Solar. Amit, any word from Arnie as he was boots on the ground using Grab? Yeah, so he likes Grab, but his one big piece of information to me was that he's used Gojek more in certain areas because Gojek was cheaper, which is exactly the reason Grab needs to acquire GoTo, which is the parent company of Gojek, because why would you pay $5 if you could pay $3 for just getting a ride? Which is why I think Grab got an investment banker called Stephen Tisch on their board last week. There's been a lot of rumors of M&A between the two companies. They're going to have to buy them out because at this point, it's going to be a race to the bottom when it comes to margins, and it's just not going to be sustainable. So Arnie likes the product. He's been using it, but his one thing was that, hey, I can use competitors here, and there's no really brand loyalty, which is fair. Now, Grab is just such a big brand that they've developed a decent amount of loyalty, but if someone undercuts them, yeah, they're going to lose that business. Which is why I think they ultimately need to be acquiring GoTo. But I don't think they need to acquire the company to get to 10. My target is still $10 by 2027. I don't think they need an acquisition to get there. It would just really speed up that process based on the compressions of margins not being as aggressive as really for the past couple of years. But it also would be a good thing to see if they could get some major M&A done. Chris, thank you for the $2 super chat. Just bought a hot 100 shares of Grab, YOLO. I think I'm going to be buying some shares, probably like 1,000 shares before earnings tomorrow as well. I already have enough Grab, but we'll see. We'll see what happens for Grab, and hopefully it's a decent earnings. Okay, Tom Lee. Let's get to Tom Lee. Let's see what he had to say. I'm going to put him on 1.25. We'll speed this up. It's going to be like a 5-minute video on 1.25 and get his indications for if we have officially bottomed.
This is our update for the week of April 18th. I want to cover some particulars before talking about the outperformance of roughly 36 basis points. Decided to orient us deals coming. And last week, we talked about how markets very likely made their structural low last week, which was last week, or 2 weeks ago, because it was last week. And that we saw a risk reward in Nvidia and Tesla. And of course, the fact that the VIX had fallen. So we're still through this period of turbulence, but because of developments this week, I believe that this is all resolved in a positive direction for stocks. So let me explain. There has been this conflict because the macro remains uncertain. If you're only focused on macro, you'd be nervous for these reasons I'm listing here. But if you looked at the equity markets, these things are actually would get you quite constructive. And so this was the battle that had been taking place for the last few weeks between the stock market internals and the macro.
Oh, we got waste management. We got waste management. We'll get to Tom in a second. I believe these are the numbers. We got them 1 minute ago. Waste management, not really reacting to it. Here you go. EPS 158 versus 169. That's a miss. Revenue 602 versus 6.15. That's a miss. There you go. So miss on the top and the bottom. Very slight misses. I mean, EPS a little bit worse than revenue, but stocks barely reacting after hours, down 0.5%. So stock doesn't really care about what's going on. Waste management year to date is, wow, it's up 14%, dude. With a 2% divvy. So less consumption, less trash. I mean, that's true, right? If we stop buying all this useless shit from China, we have less trash to throw away. But no, in general, in a world in which Nvidia is down 20% and waste management is up 14% with a dividend, I mean, this has been a year where certain plays have been more defensive, which is why waste management gets characterized as a defensive name. And people have theoretically been using names like this as a bit of safety. Over the past year, it's up 8%, but year to date, it's up 14% with a 2% dividend, a miss on the top and bottom. We'll see what they say on the call tomorrow, and that'll probably have some impact. But as of now, not an amazing earnings, but also not a horrible earnings for Waste Management.
Macro outlook. If you're macro, you might say we're facing economic Armageddon. That's something that Bridgewater's talked about, a different world order. Some people talk about the end of American exceptionalism. Others say that the top is in for the US stock market, similar to Japan in 1989. And of course, there's many people telling you that you should only be in gold and muni bonds. And gold, of course, is doing great, up 26%. It's the best since 2010. And of course, many people think there's opportunities in muni bonds. But the story of the equity market has been different. There's been pervasive bearish sentiment. You know, the AAII percentage of bears has been over 50% for 9 weeks. And the internal low was registered. We talked about that when you look at the VIX, that the VIX going over 50 and falling below 31 has always marked an internal low. And then later in this video, I'm going to talk about the 4 signs that a bottom is in. But at the end of the day, I think the equity market got this right. And it's resolving, things are now resolving positively for stocks. So what are these signs of a bottom? Well, there's 4 of them, but I'm not going to take it in chronological order. I'm going to start with what was triggered this week on April 24th, which is this Zweig breadth thrust. Now you're wondering, what is a breadth thrust? It's developed by Marty Zweig. It looks at a 10-day moving average of advancing versus declining issues. And the idea is when it goes from oversold, a reading below 0.4, and then back to 0.615 over 10 days, that's a bullish reversal. That has happened 11 times since 1978. And notably, 1 month, 6 months, and 12 months later, stock markets are always up. And this was triggered on April 24th, which was Thursday. On Wednesday, April 23rd, the high yield market options adjusted spread recovered 50% of the widening. What I mean by that is on January 24th, high yield spreads were 292. They exploded to 530 basis points wide on April 7th, but they touched 409, which is below the 50% retracement. That's a positive development because we are now walking back from a recession risk. If high yield spreads had gone from 500 to 1,000, a recession was guaranteed. But instead, it's reversed almost all the widening back to even levels before April 2nd.
So this is really important in terms of the widening of those spreads. Again, as credit spreads get wider, that is scary, right? Because that's the bond market, the credit market saying, hey, we've got some issues. That's the basis trade that we talked about a couple of weeks ago, potentially imploding. But things have stabilized, at least to an extent. So, you know, even if earnings are not amazing, which so far some of them have been pretty good, at least the credit markets aren't crying as much as they were last week.
On April 22nd, again, happened this week, we had 2 consecutive 90% advancing days. That means that stocks within a couple of days apart had posted 2 days where the advancing gains were 90% or more. And as you can see here, this 3 times since 1979, stocks are higher 3, 6, and 12 months later. And that happened on April 22nd. Now, I covered this last week, but the VIX closed below 31 after going above 15. So the last thing, of course, that would probably convince everybody that the bottom is in is if the stock market recovered 50% of its decline, which is 54 to 91 on the S&P. So that's the level to watch. The S&P peaked at 61.47 on February 18th. It fell to 48.35 on April 7th. The halfway recovery point is 54.91. And we closed on Thursday at 54.85. So we're 6 points away, 0.1%. So almost there. And of course, that really amplifies and confirms what we've been saying for the past few weeks, that we're still in a bull market. I know it's been horrific and feels terrible. And it was not clear to us if this would be a V-shaped bottom or a range trading bottom like 2011. Now, there are things that can go wrong. I covered this last week. The tariff war with China could turn into a Cold War. Are the shocks going to lead to a global recession? Not yet, but of course they could. Could the financial crisis lead to rapid deleveraging? Could inflation expectations explode? Could S&P estimates fall a lot more than 20%? Maybe. These are the things that people are going to worry about. But we also think stocks got really washed out. And as you know, I've been talking about this with Tesla, that Tesla, we think, got so washed out that they reported terrible earnings on Tuesday after the close this week, and the stock rose. And it's actually had 2 consecutive gains now solidly trading above its 20-day moving average. That's constructive in my view. And it's a positive surprise. Similarly, Bitcoin's finally catching a bid. Bitcoin fell while gold rose during the February to April period when asset markets were deleveraging. And that's because institutional investors were cutting leverage, and when they're cutting leverage, they're cutting their Bitcoin longs. But in the last couple of days, the opposite's happened. Gold actually has been cooling and Bitcoin's been rising. And I think there's a convergence trade there, and that's a lot of upside for Bitcoin. And that's good news for MicroStrategy, which, as you can see here, did not make a new low on April 8th. It bottomed on March 11th at 231. So again, a lot of thematically important stocks have looked like they washed out. In terms of granny performance, individual stocks by week, the top 5 performers in the past week were Netflix, Palantir, MicroStrategy, Abbott Labs, and Costco. And the bottom 5 contributors were Microsoft, AMD, Amazon, Meta, and Nvidia.
Okay, so that's pretty much it on his update. He pretty much makes the argument that, hey, it's not the end of the world. We're starting to see a lot of indicators in terms of that Zedwig breadth thrust argument. We talked about that in the morning, along with the the narrowing was the word for it of the credit spreads versus the widening of it. And those two indicators was the majority of Tom Lee's argument just now for why, hey, things are returning to normal. Now, he includes those risks at the end of if we get into a Cold War with China or anything crazy and the trade war escalates. But based on what Bassett said this morning, it shouldn't escalate. And if it doesn't escalate, then that would be an overall good thing. Now, he mentioned Bitcoin as well and said that Bitcoin is starting to deleverage a bit from hedge funds, or at least that's why we saw the pain in Bitcoin 2 weeks ago. That is now starting to recover. Someone else who's bullish on Bitcoin that we'll be hearing about from tomorrow is Lutnick. He did a new interview. Here's what he had to say today about Bitcoin.
Something you've never seen the United States of America embrace something and then they're turning their back on it later. That's never happened.
Yeah.
So now you've turned that page. You're in the positive world of America. And I think what's going to happen is Bitcoin will become more and more part of the just ordinary talking. People can hold it as assets. They'll trade it like a stock. There's no difference from it, maybe, but it's not really a stock. It's more a commodity. You know, I believe, like the way you talk about it, is what is Bitcoin like? It's like gold. To me, it's a commodity. Why? There's only so much of it, right? And it's like gold. Now, gold trades anywhere. No one stops me from buying this ring when I went to buy the ring of gold, right? So gold trades everywhere. Exchanges, okay. If you want to be an exchange, you can be an exchange. But if you want to buy and sell gold, you can buy and sell gold.
Right.
So I think you should be able to buy and sell Bitcoin. It's a commodity. It should be treated like a commodity. It should be treated like oil. It should be treated like gold. It's intellectually correct. I know people have all sorts of things to say about it, but in the end, it's not a currency, it's a commodity. And once you embrace the concept of a commodity, you'll see how beautiful that is and how that fits into almost every thoughtful box, right? No one stops.
Everyone get ready tomorrow at 2 p.m. because he is going to be speaking about not just Bitcoin, but the broader economy. And again, he hasn't gone live and done the media tour. Waste Management, by the way, down about 1.5% after hours now. He hasn't done it in about 2 weeks. It's been Bassett. Just Bassett, not Navarro, not Lutnick, just Bassett and Trump. So the fact that they're bringing him out tomorrow, I'm actually really curious why they're bringing him in front of cameras again. And if they're so bullish that the trade deals are going good, that they can handle more Lutnick on TV. But yeah, usually those interviews don't tend to go the best. So we'll have to see what he ends up saying. Oh, wow. We got a headline right here. NVIDIA, Eli Lilly, and GE CEOs will be visiting the White House on Wednesday in 2 days as Trump highlights over $2 trillion in U.S. investment pledges made during the first 100 days of his second term. Companies from defense, tech, and healthcare will have products on display as part of the Invest in America event, even as concerns over tariffs and markets fallout grow. So Wednesday is going to be Trump's 100th day in office, and he's going to be hosting a Invest in America event. If the headline is saying CEOs from NVIDIA and other companies, that means Jensen's going to be there. That means Jensen, for the first time, we're going to see him with Trump if Bloomberg's right and that it's going to actually be CEOs and not just representatives, which would be pretty cool because we haven't seen Trump and Jensen together. Or at least I don't remember a time seeing Jensen and Trump in the same room together or like talking together about innovation. And obviously, you know, NVIDIA has already said they're going to invest a lot of money over the next 4 years in the Trump administration. So it would make sense to see them together. This was Jensen at a Menlo Ventures keynote or sort of Q&A that he did over the weekend. He's wearing a nice little orange jacket. So that got the Bitcoiners very happy because he was wearing orange, but no leather jacket over the weekend. It was just with the orange. SoFi earnings is tomorrow. SoFi earnings is tomorrow. I'll be live at 7 and we'll be covering SoFi, but that one's going to be early tomorrow, 7 a.m. Eastern in the morning. All right, that's it. There we go. We are done for today. The daily recap will be out in a few hours, and we'll recap more in depth all the different things that we got today. Again, not a lot of crazy headlines outside of that Bessent interview this morning around tariffs and the excitement around trade deals that he thinks will be verbatim announced within the next 2 weeks, which means I would imagine pretty soon we're going to get hopefully some deals, or at least some frameworks of deals becoming finalized. HIMS up about 1% of the day. Tesla was basically flat. S&P was basically flat. Palantir, nice day from the absolute bottoms, 108 to 114, down a little bit after hours. But realistically, tomorrow is going to set the way for how these companies are going to perform, given we get deep into earnings season. So tomorrow we got SoFi, PayPal, Spotify in the morning. Got a lot of these names in the afternoon, like a Snapchat, FICO, etc. And it'll be a big day for earnings as we get into it. All right, cool. That is it. Guys, you're saying calls. I literally spent 2.5 hours with Steve last night. And you guys are saying call Steve. He has a job. He joined on Sunday because he was free, because he didn't have work, because it was Sunday. He can't just call in every single day. Like, at this point, I think I have to get him to quit his job to be on these streams every day. I think that's what I'm going to have to do. But I gave you guys 2.5 hours of Steve yesterday. I'm going to take a picture of these comments right now. I'm going to tell him, dude, people cannot get enough of you. He never believes me when I say it, bro. He thinks I'm busting his balls. It's like, no, dude, every time it's freaking call Steve, call Steve, call Steve. So there you go. After hours tomorrow, do we have any big earnings? Visa, Starbucks, Snapchat. Okay, so I think we'll still do Technical Tuesday. We will get through those earnings within 25 minutes. So by 4:20, we'll be done from 3:45, maybe 4:25, and then Jason will hop on. So, yeah, we will still do Technical Tuesday tomorrow. We'll just do the earnings for 20 minutes, and then we'll get into to the TA. Dude, I can't call Steve. He's actually busy, dude. You can't just easily call Steve. But for those that missed the show last night, we had Steve on for a long time, and we talked about a bunch of things. And I teased him for never watching a Disney movie, which he quickly reversed that on me, but still, he's never seen a Disney movie. So we got to guilt him into watching more of these Disney films. All right, cool. That's it. Thank everybody for being here. I'll be live tomorrow, or actually, no, I'm going to be live later tonight anyway, dude. I'll be live again in 4 hours for Robinhood Weekly, which is not called Robinhood Weekly. It's also not called Boys in the Hoods Weekly. I think we're just going to call it Tech Bros for today, and then we'll try to get another name in the future, but we are not allowed to use the word hood, so we'll figure out what to name it. But for today, we'll call it Tech Bros or whatever. Steve's not going to be there. Steve doesn't care about Robinhood, so it'll be Tanner, Roy, and I. And Robin Bros is actually not horrible. Robin Bros, dude, you guys have some good names. We'll figure it out. We'll figure out the name eventually, and we'll go with that. All right. Thank you, everybody. Appreciate it. We'll be live later today, and then daily recap in a couple hours. Bye, everyone. Have a good one.